You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, everyone. Hello and welcome to the Daily Currency Call presented by Forex Trading Asia. Thank you for joining us as well. And a big welcome to the members from the LCMS Traders Club watching this telecast live as well. I hope everyone is having a good week so far. We've come to the end of another week as well, being the 28th of January. We're actually nearly the end of the month already too. So I hope everyone is having a good Friday so far. We do have quite a little bit on today. We've got the USD CAD, we've got oil to discuss. We've also got cryptocurrency and the DXY. But just before we get into the call today, we'll just go through the disclaimer as well. I'll make that full screen. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering into any trades. All right, so we do have a little bit to discuss first with the Bank of Canada, and they did have their interest rate decision out on Wednesday. So we've got Gimme here, currency strategist with LCMS Traders, just to discuss that decision that was made by the Bank of Canada. So over to you now, Gimme.
All right, thank you, Scott. TGIF, everyone. Okay, Bank of Canada. Rather disappointing, I would say, okay? Because like what I said during the prep, okay, many people are actually, well, many analysts, okay, are actually expecting an interest rate hike of 0.25% from the Bank of Canada. But unfortunately, okay, they did not carry out that hike. All right. Is that the end of the meeting? Not really. Okay. Although they did not cover, although they did not rate any increase interest rates. Okay. They did give a bit of a hawkish message. All right. So what you're looking at right now is the interest rate statement released. Okay. What has changed? Okay. This is the key over here. With overall economic slack now absorbed, the bank has removed its exceptional forward guidance on its policy interest rate. So what does that mean? Okay, basically, it means that they are ready to increase interest rates. All right. Now, if we were to look, scroll down to the bottom, I'll be sharing the link later. All right. So if you guys want to read through this whole statement, feel free to do so. Where is it? Why is it that I say that, it's actually, they are ready to increase interest rate? Okay, so, okay, you might as well just start from the top. While COVID-19 continues to affect economic activity unevenly across sectors, the Governing Council judges that overall slack in the economy is absorbed, thus satisfying the condition outlined in the bank's forward guidance on its policy interest rates. The Governing Council, therefore, decided to end its extraordinary commitment to hold its policy rate at the effective lower bound, in this case 0.25%. Okay, looking ahead, the Governing Council expects interest rates will need to increase with the timing and pace of those increases guided by the bank's commitment to achieving the 2% inflation target. So what it's trying to say here is that, moving forward, the central bank will be increasing interest rates, okay, in an attempt to actually tame this whole, crazy high inflation, okay, this 30-year high inflation in Canada, okay, so that the central bank can achieve its 2% inflation target in the long run. Okay, and then that is for interest rate side of things. Okay, what about the bond holdings? Okay, as we know, quantitative easing has already ended back in November. All right, but they are definitely holding tons of bonds at the moment. Okay, and we want to pay attention to know if they are actually planning to unload it. All right. So the bank will keep its holdings of Government of Canada bonds on its balance sheet roughly constant at least until it begins to raise the policy interest rate. Okay. At that time, okay, at a time when the central bank starts to increase interest rate, the governing council will consider exiting the reinvestment phase and reducing the size of its balance sheet by allowing roll-off of maturing Government of Canada bonds. So ever since they actually stopped buying bonds, okay, back in November, right? They entered this whole reinvestment phase, right? So there's a maturity date for bonds, any bonds, all right? So anytime any bonds held by the Bank of Canada were to mature, okay, they will purchase a similar amount of bonds to replace that bonds, okay? So as to maintain the amount of bond holdings in the central bank, all right? But what this paragraph says over here is that, okay, once the Bank of Canada starts to increase interest rates, okay, anytime, okay, from then on, anytime any bonds were to mature, they will stop purchasing more bonds, okay, to replace the maturing ones. So in that case, the amount of bonds held by the central bank in the future will get lower and lower and lower. All right. So this is actually in a way like, just like what the Fed is planning to do, to sell back the bonds or to reduce its purchase when any maturing bonds were to happen. Okay, maturing of bonds were to happen. So two key things over here. We can expect interest rates hike from the central bank, okay, in the future, in the near future, probably in March, I hope. All right. And then second thing is, once interest rate hike starts, all right, the rolling off of maturing Government of Canada bonds will start. Okay. So basically, this whole process over here is called monetary policy normalization. Okay, trying to normalize, bring back the current situation of monetary policy, okay, to its normal situation, okay, which is pretty much like the pre-2008 financial crisis status situation. Okay, so that is the main gist of this meeting. All right, and of course they have released the quarterly economic projection. Okay, so moving on to the monetary policy report, okay, some lengthy 29-30 page of report. Let me just bring you to page 10. All right, 7, 8, 9, 10. Okay, the key thing, okay, to take note in this report is CPI inflation projection. Okay, so you can see over here that for 2022, the central bank, okay, latest projection of inflation is actually 4.2% on an annual basis, okay, as opposed to the central bank's previous projection back in I think October, okay, of 3.4%. All right. So this is actually a 0.8 increase in the inflation projection. So what this says is, the central bank is basically expecting inflation to rise more than before, all right, for the year of 2022. So, this implies that, the central bank is more likely going to just, hike rate to tone down this crazy inflation level, okay? And then in 2023, no change at the moment, all right? No change. I believe the central banks, the committee members, they are still trying to, while they're still observing, okay, paying attention to this whole global supply chain disruption, okay, and how it progresses in the near future before making any potential amendments. I mean, after all, right now it's just January, right? The next time we'll get the updated set of projections is probably in the March meeting. All right. So at that time, we may or may not see any revision to the 2023 inflation expectation, okay, inflation projection, because it all depends on how this whole global supply chain issue were to unfold in the near future. All right, but as of now, okay, we're in the first month of a new year. All right, so we will definitely have to pay attention to the 2022 because we still have like tons of 11 months to go. Okay, so yep, inflation is expected to be higher than previously forecasted. So yeah, we definitely can expect interest rates hike from the Bank of Canada. Okay, as to how many rate hikes we can expect, many analysts are actually expecting like 4 to 5 from the Bank of Canada. Okay, like I've said last year, end of last year. Okay, 2022 will be a year of interest rate hikes from major central banks. So whoever is holding back on interest rate will be falling behind. Okay, hint ECB, European Central Bank. All right, but more on that when the meeting comes near. All right. So that's pretty much it for the Bank of Canada. Okay, and the next meeting will be in March, 2nd of March. All right. So what impact this has on the Canadian dollar is that upon release of this statement, okay, the Canadian dollar actually weakened. All right, although there's some form of hawkishness coming in from the central bank. Okay, some would call it a hawkish hold. Okay, hawkish hold of interest rate unchanged. Okay, so although the central bank held interest rate unchanged, they did deliver some form of a hawkish tone in the form of the interest rate statement or maybe forward guidance and things like that. Okay, and of course during the press conference when Keith McLellan delivered his speech. Okay, yeah, but nonetheless, it was pretty much a disappointment that the Bank of Canada did not hike interest rate. Okay, hence we actually see a weakening in the Canadian dollar and then some retracement and things like that. But nonetheless, later on I'll go through the chart and then you guys will have a better idea of where dollar CAD is moving towards. Okay. Okay, there's one more thing that I would like to highlight. Okay, is that next Wednesday, OPEC Plus meeting will be taking place. Okay. I guess I'll talk more about it later on when we go over to the chart. Okay, when we have more zones, support resistance zones, and key levels to pay attention to. Because from now until next Wednesday, it's probably like 2.5, 3 days to go. Okay. Yeah, prices can be very volatile and things like that. All right, so I'll cover it more later on. For now, okay, is there any questions on are there any questions on Bank of Canada and things like that? Okay, no question. Then with that, I will hand it over to Scott for his analysis on the DXY. Over to you, Scott.
All right, thanks for that, Gimme. And I'll just get straight into the chart now. And there is a little bit going on the US dollar as well. We are currently over 97 as well. As you can see, we did make a breakout. This is the 4-hour time frame. So let's go down to 1 hour just to get a bit of a feel for intraday. So this is in the GMT +8 time zone. So it was 7 o'clock last night. We had that hourly candle close above 97, and then we made a push. And the high there was around 97.30 nearly. Now I do have a level up here at 98.23. I had to go to the weekly to get this because on the daily, we haven't seen a move like this where we're at a high that we frankly haven't seen for in several months. In fact, last time we were up here that's July in 2020. So something to think about there, everyone, as well. And then we've got 98.20, and then we've got 100. So we've got quite a lot going on here with the strength on the US dollar as well. And I just want to touch upon the news that we saw last night and also what we are looking for later today as well. So for Thursday, we did have the advanced GDP for quarter on quarter come out stronger at 6.9, expected was 5.3. And that would coincide with that candle, that 9 p.m. candle as well. So the market digested that, and then it closed strong above 97. So we did see a beat in the advanced GDP price index as well. And unemployment claims did come in line with expectations as well. And then for later today, we do have some high impact news. We've got for the US, it's just the core PCE price index month on month expected to be 0.5%. I'm interested with the personal spending and the personal income as well, just to see what is going on with the personal income. Month on month expected to be a little higher, 0.5%. Personal spending down a little, negative 0.6%. So with the US dollar as strong as it is, it's going to be very key to see how it reacts to a pullback and if the pullback is bought into. Now that's what I want to wait for. So it is pulling back a little bit. We're currently trading down 15 points or so since the high of 97.30. So I'd really like to see a test of 97 or a break. I'm not looking to do anything with the index until we do see a little bit more of a pullback, because obviously there's not a lot going on for the US dollar currently. That's what I want to look for. And be very cautious with the reversals as well if you are playing for a little bit of US dollar strength, because it really is doing this early, because we've got interest rate rises, but they're a little while away from a day-to-day perspective. So be cautious trying to play the reversals is my thought as well. But those are my plans there for the US dollar, waiting for that pullback. Now we do have the USD CAD, and we've got WTI against the US dollar for oil now with Gimme. So I'll just hand it over to him now again.
All right, hi once again. Okay, so like I was saying earlier on, all right, OPEC Plus will be meeting next Wednesday. It's probably likely, okay, that they may be holding its oil production hike unchanged at the 400,000 barrels per day pace rate. Okay, so whatever amount they are producing right now, okay, if they were to stick with the decision of a 400K per day of hike, okay, that means, well, next month onwards in February, they will just produce 400,000 more. Okay, but it seems like, okay, oil prices is, is this going to upset the US, going to upset the major nations? Okay, before we go over to dollar CAD, let's just look at US oil. And okay, US oil, this is WTI crude, okay, West Texas intermediate crude. All right, you can see that yesterday, all right, let me just zoom in. I mean, when was the last time we actually hit that high? Okay, yesterday, okay, look at this candle over here, right? It was trading at $88 per barrel, okay, for WTI crude. And like I've seen, when was the last time it actually traded that high up? Okay, this is on a weekly chart, we don't see anything. Let's just go over to monthly chart. Okay, you can see that the last time it was actually trading that high was back in 2014, 1st of October, the month of October. Okay, it was actually moving downwards on a downtrend. Okay, it's like some probably like some 7.5 years, close to 7.5 years ago. Okay, so gold is really trading. Gold, come on, gold. Oil is really trading at a very, very, very high level right now. All right, yesterday, of course, the candle closed, and you can see like there's this, uncertainty, long upper shadow, long lower shadow, uncertainty if price should go higher or price should come back down and things like that. Okay, but what we know is that price of oil, okay, is already trading at like the 88 level. Okay, it has already broken my my resistance of 85. Okay, the next resistance level I have is 92. Okay, why do I have 92? Okay, let me just zoom out. You guys won't be able to see the candles, but you guys will be able to see roughly where it's at. All right, so you can see that around this region over here, the 92 level, okay, seems to be quite a sensitive level, okay, that price has reacted to multiple times, right? Over here, back in 2013, and then 2014, early 2014, and then the most recent one will be 2014, September and October period. Okay, and if you go further behind, you can see more reactions on this 92 level. Okay, 2013 and May, April, March, and things like that. Okay, so which is why the 92 resistance, the 92 level, okay, resistance level is the level that I'll be paying attention to next. Okay, so what this means is that if you guys are trading, well, if you guys do trade the WTI crude, then I personally, okay, I will be looking for buying opportunities. Okay, but these will really have to be very, very, very short-term trade. And to be honest, I would prefer, okay, to wait for the OPEC Plus decision next Wednesday, okay, before deciding if I should buy up crude oil, okay, because remember, like months ago, US, okay, the US White House has actually issued a statement to the OPEC Plus, suggesting them, okay, recommending them to actually increase oil production hike by an amount more than 400,000 barrels per day. Okay, and this is, of course, with the support of other nations like China, India, UK, Japan, Korea. Okay, because well, basically oil prices, the rise in oil prices has caused inflation to rise to decades high level. Okay, and not only oil prices, okay, but other prices as well, because the rise in oil prices will indirectly, okay, lead to inflation in other areas like food, and other areas like vehicles and things like that. Other, I would say, other components, okay, used to measure inflation in general. Okay, so do not underestimate the rise in oil prices. Okay, so the U.S. White House issued a statement, suggesting that the OPEC Plus actually increase this whole oil production hike more than what they plan to do back in July, okay, which is a 400,000 barrels per day hike consistently on a monthly basis. Okay, maybe they should look at like 800 or 600,000 barrels per day of a hike, but they refuse to do so. Okay, they claim that oil price will come back down, when the when demand starts to meet supply and things like that. Okay, right now, yeah, the supply is definitely not, in a way, not meeting demand. Okay, with this whole OPEC Plus not going to increase and things like that. So that actually led to the US, okay, and other nations to carry out this whole SPR thing. This what does SPR stands for again? Let me just do a quick search. It's the full term of it is PRUS. Oh, Strategic Petroleum Reserve. Okay, so what the US did together with other nations is that they tap into the SPR, Strategic Petroleum Reserve. Okay, and because oil prices rising, right? So if they were to carry on buying oil from like Saudi Aramco and other oil companies, okay, it's going to be very costly. Okay, so what these nations do is that they decide to tap on their reserve, and then instead of the companies in their countries buying oil from Saudi Aramco or other Middle East OPEC Plus oil companies, okay, well, they can just buy straight from their respective countries. Okay, that's how they actually tap on their reserve and to actually, well, in a way, bring down oil price. Okay, so by not purchasing from OPEC Plus, companies are able to buy at a discount. Well, definitely not something like 85 or 87 or even 88 per barrel, right? So it's going to be too high. So many, I would say, changes have taken place, okay, recently, in recent months, with regards to this whole rising in price of oil. Okay, and if you look at UK oil, which is the Brent crude, all right, it has already hit 90. Okay, all the while, yeah, Brent crude is trading slightly higher than WTI crude. Okay, but we are not, well, I wouldn't say we are not expecting, but we are hoping the Brent crude do not hit 90. Okay, but it has already hit 90, and at the moment it's trading at 89.58 per barrel. All right, so okay, long story short, if you guys are trading US crude oil, okay, then I would suggest waiting for the OPEC Plus to conclude its meeting next Wednesday, okay, before before trading this, before looking for more upside on the US oil, okay? And then when it comes to oil, we will definitely look at dollar CAD, okay? So how do we trade dollar CAD? Recently, okay, well, it's very recent, I would say, due to the hawkish FOMC meeting, and of course, like what Scott has mentioned earlier, okay, the superb advanced GDP quarterly data released from the US, okay? These two, I would say, very strong positive news, okay, being released, has led to the strengthening, okay, no question asked, okay, has led to the strengthening of the US dollar across the board, okay. Against Canadian dollar, like I've said, Bank of Canada is a bit disappointing, okay. The slightly hawkish tone, okay, sent out through the monetary policy statement by the Bank of Canada is not going to do much, okay, in terms of fighting against the strength of the US dollar, okay. Hence, we see a break above, okay, the resistance level of 1.264, okay, and right now it becomes a support, all right. Its next resistance level is at 1.292, quite a distance away, all right. So I'm expecting dollar CAD to rise further upwards, okay, to be more bullish in the short term, at least until the OPEC Plus meeting, okay. And look, yesterday, okay, because of the advanced GDP data, dollar CAD has already broken above the key level of 1.27. I believe, okay, for the time being, it will trade comfortably above this level, okay. Just put it in red, this level over here, okay. Chances are it will stay comfortably above this level for the time being, okay. Today, so far, okay, it seems like it's approaching this moving downwards, trading downwards to this 1.27 key level, okay. Now, in a scenario, okay, whereby there's a bounce upwards, all right, right now it's trading downwards, okay, who knows, maybe in the afternoon during the European market open and things like that, okay, it may actually react off this level, okay, i.e. bounce up from the 1.27 level, okay. In a scenario whereby this happens, I will be looking for buying opportunities at 1.276. Just change the color and the line over here, okay. This will be my buy entry, 1.276, okay. And then, okay, my stop loss will be at 1.268. It will be below, it will not be below the support of 1.264, okay, because like I've said, keep your trade short term, especially for anything CAD related or oil related, right? So below this key level 1.27 would be a safe level to, for my stop loss, okay? So 1.268 will be my stop loss level. It's actually an 80 pip stop. Okay, so imagine if I were to set below my support level of 1.264, there's easily additional 60 pips. There'll be like I don't know, like a longer term, like a swing trade kind of thing. Okay. Moreover, it's Friday today, all right? So I really suggest you guys close off your positions, okay, before the session ends today, okay, because right now it's really, there's just too much going on around the world, okay, Ukraine-Russian issue and things like that, and who knows what's gonna, what announcements can be made across throughout the whole weekend, okay, Saturday and Sunday, right? And then before you know it, there may be a strong gap upwards or downwards. If it's in favor of you, good. If it's not in favor of you, your trade may be closed. That's the issue, all right? Okay, and then my take profit will be at potential take profit, okay, will be at 1.289. 1.289, which is 130 pips, okay? Once again, this is potential take profit, okay? At the end of the day, if this trade either has been triggered, okay, and you guys are in profit, okay, chances are, my speculation right now, okay, this is my speculation, it may actually hover around the 1.28 level, okay, because basically it's not sure if it should break trade higher than that level, okay, because it's Friday, okay, although we are very bullish on the US dollar at the moment, okay, but from now until 1.28, it's some 80-90 pips away, okay. So if dollar CAD were to trade some 80 or 90 pips upwards, all right, it's considered quite a big move, I would say, for dollar CAD, just for this pair alone, all right. 80 pips upwards or downwards is quite an amount. And then, for it to break above 1.28, we probably need more liquidity. Okay, we probably need more conviction. Okay, in terms of fundamentals, or maybe in terms of political news and things like that. Okay, so just pay attention to 1.28. Okay, if you guys end up taking up this trade, okay, just pay attention to the 1.28 level. If it trades close to there and starts to stagnate, close off your position for the profit, and yeah, just stay out for the rest of the day until Monday comes. All right, so that is for dollar CAD. Any questions on the trade idea, on OPEC Plus, on Bank of Canada, and things like that? Okay, there's no question. If there's no question, once again, I will hand it back to Scott for his analysis on cryptocurrencies. Back to you, Scott.
All right, thanks, Gimme. And just to start with, we'll have a look at, just been looking at BTC here against the US dollar. So we are actually seeing a small lift here. I'll just get rid of that. So we've got, let's go to the daily time frame just to establish some levels here now. So we're currently trading, we've seen a little bit of a mixed bag from Bitcoin. So we've seen it get down to 33,000 flat. I've got a level down here at 29. So this is just showing you, illustrating the lows of recently seen price. Now, we do have some stronger support down at 29,000. We're currently trading at around 37,000 or so, or just above. And if I just, so this is the daily time frame. You can see that even with the stronger US dollar, we have seen it gain a little bit, but frankly, honestly, I'm not convinced, and I want to see some more selling before I contemplate getting into a longer term position here. So 29,000 on the weekly is a little bit clearer here. So we've seen several touches down at the lows there. And then if 29 is broken, then it gets a little bit more interesting. Then it's down to around 12,000. 18,000 has been a number that I've heard thrown around recently as well. So that could be another point below 29,000. So it is still a bearish thesis here on Bitcoin. The weekly candle and how that closes will be interesting on a position standpoint, because right now that does look a little bullish, but we've just got a lot going on in regards to the upcoming months. We've got Feb and March, where there's more uncertainty, most likely with the interest rate increases that are coming up. And that's just going to cause the market to have some concern still, is my thought on the positioning for Bitcoin. And then also Ethereum is a similar situation. So we saw it actually broke below 2,200. If we go to the weekly, you'll see a better idea of the structure here of the levels. So we've got 1730, again, similar to Bitcoin, obviously much cheaper though, for 1700 as the support level, when we nearly broke below 2000 in fact. So it did hold up, but it's looking quite bearish here still. So my thought process is that we've got uncertainty still. High risk assets are not going to be really desirable, and we are going to see, even though there is a bounce, I would say for someone that's looking to hold long term, for my entry, it would be down at 1700. But I would assess that if it comes up sooner before the first increase in interest rates, I'll leave it, because I think we could see some panic once markets actually have to deal with higher interest rates. Even though they know about it, we could still see a bit of panic. So be cautious there, everyone, in regards to crypto and how you buy the dip. And there is still a bit more time for selling, in my opinion. But those are my thoughts there on crypto. I will share the charts and ideas in the LCMS Traders Club as well later today. And I don't think we've got any questions. So that is it. Thanks for joining us, everyone, and have a great weekend. And please feel free to ask questions in the LCMS Traders Club as well. And bye for now, everyone. Have a great rest of your day.